Good afternoon, everybody. Welcome. Welcome to the 20th market close of December. Holy banana bread. So I forgot to mention this yesterday, but you guys did it. You guys hit every single market close for December. The Financial Express has made it from one end of the month to the other. So I did mention that there would be a reward for that. And that reward is that the Financial Express continues until we miss a day. So this is up to you guys. If you guys want me to do market closes every day, keep the Financial Express going. Once we do fall off the tracks, I love that. Once we fall off the tracks, we'll go back to the regular schedule. But until then, let's keep the good times going. Today, I am opening up for Friday. So Friday, biggest reason for that is tomorrow, of course, being New Year's Eve. Yes, we have a market close tomorrow, but, maybe not everybody's going to be here because some people might be, maybe getting ready for some festive type things, or drinking, or whatever it is people do on New Year's Eve. I figured let's just do it today. We'll hit Friday, or we won't hit Friday. Then we come off the tracks pretty fast. So, as you guys know, we got our 4 goats, and we have that bonus goat. So today and tomorrow are the last days to see that bonus goat. And, oh boy, guys, there's a secret goat. There's another goat. It's a secret goat. I don't know. There's a way to get it, but I'm not telling you guys what it is. And I don't know where Andrew is, but I can hear right now Andrew's going, "What do you mean you're not telling us how to get it?" There is a way to trigger the secret goat, and we're going to see how long it takes for someone to figure out how to trigger it. Maybe we don't see it till Easter. Maybe we don't even see it ever. But there's a secret goat. There's a way to trigger it. Be creative, I guess. Be creative. It's actually not that hard. It's not that hard to trigger. I will say that. There's a simple thing. There's a simple thing to do it. But anyway, let's not talk about goats for the moment. Let's talk a little bit about the market. We got a green day. All power.
Now there's a topic that gets my circuits buzzing. These little escape artists basically
wait, Alexa, stop. Okay, I do not know how I triggered the A word, but I did. Okay. Back to what I was saying. This green that we're getting in the market today, absolutely triggered by, well, mostly metals, mostly gold, silver, commodities moving up. People moving off of more softer stocks, shoring themselves up, like saying, well, we don't know what's going on. Let's move back into gold. Let's move back into silver. So we are seeing some positive in there. And, well, you know what? Let's take a look at the market. I'm going to pull it on up here. Here's our TSX. So we're up 0.26%. And we'll take it. And this is a story that we've seen quite often this year. The TSX in the green, the US market's in the red. Because you know what? We are the ones that have all of that exposure to mining. We're the ones that when metals decide to run, when things get metal, we go into the green, let's just say. So, yeah, that's kind of a cool thing. So right now, we are well into a green month. It's something massive would have to happen for us not to finish in the green. This blue line, those of you who are unfamiliar with it, this is where we ended November. So we're well above it. We've got 1 day left. I've already called it a green month. I'm just reiterating. Green month, fantastic, love it. All right, now looking at the S&P 500, well, they're down a little bit today. So they're looking at 0.05 into the red side. Now they are well above that blue line as well. So they're going to finish in the green as well. The NASDAQ down a little bit more, down 0.1. Now, some of the softer stocks are NASDAQ stocks. And it's not even soft. Some of them are people taking a little bit of profits. We got a whole mix, but the NASDAQ is feeling it, down 0.1. The Dow Jones Industrial also down 0.1 as well. But everybody's well above the blue line. So it has been a green month for both Canada and the United States. And here is Russell. Russell not having a great day. Now, if anybody could fall below this blue line tomorrow, maybe the Russell, because you got to look when the market's soft, when people are starting to move to more safety-oriented investing locales. Yeah, this is an area that also takes a bit of a hit, and we kind of see that. So look at it this way. A lot of this downswing on the Russell is the upswing in gold, silver over here on the TSX. So I'll take it. I'll take it. And here we go. So gold, now gold has started to slide back the second half of the day, but currently up 0.32. Silver, oh boy, look at this. Great day for silver, up 5.68%. I'm loving it. Copper also having a pretty good day, up 3.89%. But copper's a different story. But watch today's video, guys. I did drop a copper video today. It was one that was requested by the channel members. It's kind of fantastic, and it kind of gives you a good idea why I am bullish on copper. So definitely one to watch. And tapping off or closing out the commodities, we got oil, West Texas Intermediate also up 0.59%. Bitcoin, Ethereum, both up as well. So not a bad day for crypto, not a bad day for commodities, not a bad day for the TSX. All right, and guys, what time is it? 3:52. All right, we got 8 minutes to the bell. I got lots of time. Let's head over here to our heat map, and I'm just gonna double click it here, just do a refresh, make sure that we got up-to-date data. We do. And as you can see, we got this nice green block right in the middle here. So these are our non-energy minerals, our industrial services, and our energy minerals. So look at this. You got Barrick Gold up 0.68. Oh boy, one interesting one in here right now is Cogeco. They're actually down 0.84%, but nonetheless, everybody's looking pretty good. CNQ over here on the oil side up a full 2.42%. Not too shabby. Cenovus is up. Imperial Oil's up. Sunco, Torlamine. It's looking pretty good. Enbridge is up today as well. So I like it. I like it a lot. All right, let's take a look at the U.S. In the U.S., it's a little bit of a different story here. There we go. It just refreshed. A good amount of red in a lot of sectors. And you can see Tesla's down almost 1%. Who is this? I need to take a look at this one here. Oh my gosh, I can't even open it up. It's Azul Q. I don't know what, well, they're a penny stock. They're only worth 0.06. I was going to say down 57%. That's a bad day. That's a bad day for sure. Palantir almost down 1.57. Definitely some stuff moving to the downside. All right. Heading over to Bitcoin and the crypto crew. Let's refresh that. There we go. Yeah, they're in the green. That one needed to be refreshed for sure. So Bitcoin up, Ethereum up a full percent on Ethereum. XRP up a 1.09%. Solana is up. This is just a good looking market. Now, it is a tradition around here to grab us an altcoin. We're going to dig deep. Well, as deep as we can get here. Come on, let's go deep. Okay, all right. I'm trying to get deeper. All right, we're going to grab a red coin. Let's grab this little coin here. I don't know what it is. Let's pull it up. All right, so we are at Kokinu. Actually, I think it's pronounced something a little bit differently than that, but I don't want to pronounce it on the air. Yeah, so Coke. Coke Eno. What is this? Obviously, it's a meme coin. If you think of things like Shiba Inu, probably kind of looking, maybe taking inspiration off of that. Gosh, do I even have any data? Yeah, here's some data. All right, so Coke Inu, they're worth so little that you're using exponents to see it. So 0.17, so basically 0.18 to the exponent of -6. So it's not worth much, guys. It's not doing well. It seems to be up and down. I don't know what this one is for, other than I strongly suspect it's a meme coin. Anytime you throw Inu in there, it gets to be a little bit of a coin of a meme. Like you got a few of them, like the Shiba Inu and all of that. I don't know what this one does. If you guys are interested in Coke Inu, mispronouncing it on purpose, yeah, read the white paper. Don't just jump into this. If you're probably going to lose money if you do. Yeah, I don't trust a lot of these crap coins, and I call them crap coins because it's basically like going to the casino, going to the crap table, throwing your dice, and watching the house win again. So yeah, be careful with these. There is money to be made in crypto, but stick to the big coins. Stick to your Bitcoin, your Ethereum, your XRP, your Solana, and gosh darn it, even the Dogecoin. Even that coin, which was kind of a joke initially, but it's still a safer bet. It's still a safer bet. So guys, just be careful with crypto. Be careful. That's all I say. I do like crypto exposure, but when it comes to those altcoins, I'm not there. I know some of you are, and that's fine. That's fine. I mean, and also the ones of you who are there, you're doing your due diligence. You're not just blindly going into a coin and saying, "Hey, I'm here. Take my money." So what can I say? All right, let's. Oh, I just went back big. All right. And let's go into the chat. You guys are definitely here. All right. JJ, JJ, Jonathan, Jonathan first in the house. Am I late for a copper rush? You're never late for a copper rush unless you jump in on the other side of that copper rush. Claude says hello. Better metal day. I assume you're talking about music, right? Well, I know that you can allude it. You can allude it to metal, music wise, and there's interesting metal out there. That's for sure. Not my favorite genre, but I respect metal. I respect metal. I will say maybe this isn't metal, but a few years ago I found out Twisted Sister had a had a Christmas album. I had to buy it just to hear it. I had to. I had no choice. Now that's technically more glam rock than anything else, but it's in that direction. It's a footstep in that direction. Scott says good afternoon and happy New Year's Eve. Nice. Wah Hipple is I am here. Paul's in the house with a good afternoon. We got a woot. We got the Nightbot. We've got, whoops, I just really scrolled too far. We got Michelle with a good afternoon all, and we got good afternoon everyone from Bismarcky. I don't want to jinx it, but MSTE is in the green. Nice. You may have jinxed it, but hopefully not. Hopefully not. It would be nice to see. I'd like to see Bitcoin recover a little bit more in the last couple days of 2025. I will tell you, I was thinking a bit about Bitcoin today because I've started scripting the prediction video for 2026. So I am into that already. So what can I say? Scott says pedal to the metal for the TSX. This year, big time. The TSX, right now, I think we're sitting year to date 28.97 or 98, somewhere in that vicinity percent. That's absolutely fantastic. The S&P 500 is only at about 17%. So we're beating them. We're beating them by about 11%. So I like that. All right. Elisa's in the house with a hello, everyone. We got greetings coming out of Alberta from Cowboy. Dorpat, hi all. What's happening these last days? Well, we got a market close today. Got a video that dropped today. Tomorrow, we got a market close. The market closes at the normal time tomorrow. I think it was, I was going to say, yesterday, it was brought up that maybe the market closes early, and I was just like, "What?" I don't think it does. So I had to double check. I had to look it up because if the market was closing early tomorrow, we would have had to move the show earlier. But normal market tomorrow, normal market, and I'm surprised. Like if there's any, all right, they closed the market early on Christmas Eve. I'm really surprised that they're not doing it for New Year's Eve. Especially considering the fact that some of the lowest volume days of the year are yesterday, today, tomorrow. Not huge volume this week, so I think they should. I think they should. All right. Sky says, good afternoon, everyone. Bear market in January. No, no. I am. I will say this. I'm not predicting a bear market for 2026, but definitely watch the video once I have that done. But I'm not predicting a bear market. I am predicting something, though. I'm predicting something. You'll have to watch. You'll have to watch the video. You'll have to watch the video. Wahipple. Let's see. Foam 2 had a pretty good day today. All right. Uh-oh. Uh-oh. Guys! The bell! I'm 2 minutes late! And you want to know what's really funny? About 2 minutes ago, when I was supposed to be ringing the bell, I heard Jill yelling something in the house. I couldn't quite make it out through the soundproofing in the studio. But now I realize what it was. She was trying to let me know that it was bell time. Oh, at least it was only 2 minutes. It wasn't. Yeah, here we go. Bell. Sorry, Mary. By the way, Mary's in the house with a hello. And Mary is our official captain of the like button and the bell. I am getting glared at for sure from Mary for missing the bell. And guys, you don't want to get glared at too, so hit that like button. I'm going to have some coffee while you guys are busy turning that thumb to that nice shade of blue. Oh, so good. Sorry about that. I think I slurped that one a tiny bit. Morley says, thanks for the copper tips, Candace. I started the CPCC ETF in my portfolio. So yeah, the CPCC, guys, that is the covered call copper producers ETF from Global X. So pretty excited about that one. I will tell you, I mean, I did add that one to the 0 to 100K challenge. There's a couple things I love about it. One of the big things I love about CPCC is the dividend is not aggressive. So because it's not aggressive, that means that they're probably not doing at the money covered calls, meaning that they're giving it room to breathe, a little bit of room to breathe, a little bit of room for that upside, because there's going to be a lot of upside in copper. So I like that because that makes that ETF really good for the hybrid investing. So if you're a growth income investor, that's a great one. That's a great one for sure. All right, the bell. Yep. Chad's watching to see how late I was going to be. Cowboy. Market was open. Market was open. Was Boxing Day not much for activity, but open all the same? Yeah, the market was open in the U.S. on Boxing Day. So, yeah. Michelle says, I love when you're late. Ah, I know. It's like, it's my humility. It's like, oh no. Claude, MSTE not in the red, but was close. All right. Well, gotta like it. Let's see. Oh, Candace, just like a city bus, just a few minutes late. I know. I know. I'm like, how did that happen? It's because you know what? I stopped putting my hand on the bell. I've been putting my hand on the bell lately just so that way there it's uncomfortable and it makes me watch the time a little bit closer so I can get my hand off the bell. I didn't do that today. I did not do that today. All right. First quarter, BTC will do good. We are going to see some interesting things, I think, with Bitcoin in 2026. And I'm not gonna spoil the prediction video. So I'm trying to keep a few things under wrap. A few things under wrap for sure. CPCC getting added to my TFSA next distribution day. Nice. Let's see. Second quarter for alts, my prediction. All right. So you're thinking Bitcoin's going to run and then we're going to get an alt run after that. Could be interesting. I will say I'm not really predicting a crypto winter either for 2026. So, you know, whether we see an alt run, that's going to be an interesting story. Kiev and Cass in the house with a good afternoon, gang. Always good to see you. Always good to see you. Let's see. CPCC, 0.65% Murphy's, plus the spread and no divvy. What do you mean no divvy? There is a there's a divvy. There's a dividend. Let me show you. All right. Boop-a-doo. Let's go back here and we're going to head on over here. All right. CPCC. There we go. There we go. All right, so here is your covered call ETF. And when you look down here, you can see a lower yield, but it's a 14 cents dividend. So 14 cents you'll get each month. And this is kind of and this is where I was talking about that yield. So that yield is a little low. Now, keep in mind, guys, from launch, you know, they have risen quite a bit. They've gone from 1992 to 2190. So that has pushed the yield down a little bit for sure. But I like that. When you've got something like copper that is expected to have some serious growth over the next few years, I don't want at the money. I don't want to, you know, I love the income, but I also want a little bit of that upside too. So it's kind of one of those things I really, really like. Like the success of Bank. Bank is the same way. You're getting some upside with Bank, and that's been really good, as we've seen, of course, what we've seen with the financial sector over the last year. So not a bad thing. Not a bad thing at all. Let's see. Cowboy says, you need the Flavo Flav clock to help you with the bell. Yeah. Gosh. That's what I need. That would actually be kind of funny. That would be kind of funny. Oh boy. And yeah, Chad finds that funny too. I don't know if I want the Flavo Flav. That clock, like, you know, that he wears. I mean, hopefully it's really light, but to me, I just look at it and I'm like, that looks like it's really heavy. I don't know if I would want something that heavy around my neck, but you know, what can I say? What can I say when it comes to that? Yikes. But oh well. All right. Whew. Guys, what a day. Yeah, the market's just been really interesting. Like 2025. And we'll talk a little bit about 2026. So, one of the key things that I'm looking at when it comes to 2025 and then 2026 is the momentum. The momentum that we've had in 2025, I will tell you right now, I don't think we can hold that momentum through 2026. So, you know, when we look at the TSX, and here, let me pull this up. let's, whoops, I'll bring it over here. So when we look at the TSX, let's take a look here. So year to date right now, okay, 28.50%. That's huge. I will tell you right now, even though I think we're still going to have a good year for materials, I don't think we're going to be able to pull off a 28.5% again. I think we're going to be a lot closer to the average. I do think we are going to be on the upside. I think, and I will tell you that I think, like this year, I think we're going to see a lot more growth in the second half of the year as well. So that's kind of be that nice little interesting thing, but this is going to come down a little bit. I kind of look at it, and this is an analogy I actually use in the video. This year, the markets had a pretty big meal. They had a pretty big meal. Next year, we kind of need to digest all of that. So I think that's going to play into the market. And what I mean by digestion, well, you'll find out in the video. You'll find out in the video. I'm excited about that one. So that's going to be fun. Those of you, by the way, anybody who missed the show on Sunday, oh boy, the first hour of that show, we went over last year's predictions, and that was just a lot of fun. That was a lot of fun. It was funny because I forget what the predictions are. By the time we, whoa. All right, guys. Technical, we had a technical mishap here. Oh boy. All right. All right. I got to go to big screen for a second, guys, just to get the to get this back. Holy banana bread. Yeah, something lost its equilibrium. Something lost its equilibrium. All right, we're close enough now. Okay, holy cow. I was just there and all of a sudden the camera toppled over. I'm like, what? What's going on? Oh boy. All right, back to oh boy. What the heck were we even talking about? We're talking about the TSX next year. So next year, it's not going to hit the same numbers. It's going to struggle a little bit. It's going to struggle a little bit. One of the key themes, I think, is that we have companies out there right now, and you guys all have seen this. We have companies that have valuations that perhaps are a little on the high side. So I think we're going to see some corrections in the new year. We're going to see things start to steady out. We're going to see things looking for I hate to use the word fair value, but I think that's kind of what we're going to see. We're going to see things start to move towards what they're really worth. So you're going to have some companies that will lose a little bit of their market cap in the process. It's going to be interesting. Now, it's not going to be like, I'm not seeing it as a bear market. Like, it's not going to be like the whole market falls. Well, no, there's companies that can support the valuations that they have. And those ones will stay. Those ones will be fine. Those ones may grow. But there are a lot of companies. Like, if you look in AI, there is a lot of companies that basically threw AI in their title that are not really producing a lot. They're not really doing much of anything. Those companies are going to those ones are going to see more serious corrections than if you look at NVIDIA. NVIDIA is doing stuff. When you look at their market cap, yeah, it's huge, but you can justify it a lot more than you can a lot of the smaller AI companies. And I've been talking about this, I think, a lot. How those companies on the periphery, those mini bubbles on the side, some of those are going to pop. I think some of those are going to come down to earth, and it's going to be very interesting. I think we could, and I mentioned this in the video, we could get to a point, now where one thing goes up and everything goes up, like NVIDIA goes up. Everybody goes up too. They all come with NVIDIA. Like, NVIDIA has a gravity pulling everybody up. I think that phenomenon is going to break in the new year. So I think you'll have a situation where one of them can go up, the other can go down, and we'll get a lot more independent movement with stocks, and you won't have as much correlation. So it's going to be I think 2026 is going to be a very interesting year. All right. Scott, let's go back to big screen here. I will be giving my portfolio a makeover in January. Perfect. Yeah, that's not a bad time, guys, to be, if you do a rebalance. It depends on how you rebalance. Some people will do it quarterly. Some people may only rebalance once a year, but it never hurts to take a look at your portfolio and, do a little bit of tinkering. Now, I kind of argue against doing it a lot because if you meddle with your portfolio too much, well, you can realize losses and you can cause a little bit of issues, and you want to be a little. I think you want to be a little bit careful. Brandon Beavis, one of the things that he that I got from him once is he was saying that investing is like a bar of soap. The more you handle it, the less you got. Um, I don't 100% subscribe to that, but I think it's not that far off the mark. So it's that situation, like, don't don't go selling something just because it's in the red. If you're going to sell a stock, I always look at it this way. I will sell in the red, but I always have a plan. If you don't have a plan and you're just selling because it's in the red, that's usually not a good move. That's usually you creating a loss with no plan to make up for that loss. Whereas if you're selling at a loss, but it's because that stock has been stagnant for so long and you're moving it, you've got a plan to move it to another stock. So maybe you're moving it from A to B because B is moving in the right direction. B is going to make up the money that you lost on A pretty fast. That makes sense. That's a plan. So that's kind of that thing. And I know there are some people who says, I will never sell at a loss. Well, I'll tell you somebody who sells at a loss. Warren Buffett sells at a loss. It's kind of that thing. It's like, yeah, not every stock you add to your portfolio is going to be a winner. There's going to be losers. And there's going to be some real stinkers too. And it doesn't matter how good you are. You're going to pick up some stinkers from time to time. Look at everybody who got involved with Weed MD not that long ago. Well, towards the beginning of the pandemic. Oh, that stunk up a lot. That stunk up, not their product. Well, their product stinks too, but it stunk up a lot of portfolios for a while, and you will make mistakes. Just make sure you learn from your mistakes. Make sure that if you are taking that loss, that you at least have a plan for what you're going to do with that funds. Also, if it is, if you are holding something in a non-registered account, tax loss harvesting can be the plan. So, I think we were looking the other day at the possibility of, some of the people who have MSTE outside of their registered account saying, okay, well, maybe I'm going to take that loss. Maybe I'm going to apply it against capital gains. And to me, that's a plan. Just as long as you have a little bit of a plan. The last thing you want to do is sort of look at something and go, oh my God, I think it's going to zero. Got to sell. Well, that's fear. That's what that is. Fear, uncertainty, and doubt. Not the things you want to use, when things are starting to creep down a little bit. And those of you who have not been through a bear market yet, those will be the feelings that you'll be fighting with when we do get to a bear market. Luckily, I don't think it's going to be in 2026, but that's me saying I don't think. I could be wrong. I always say, be prepared. A bear market could come when you least expect it, or it may come quite a ways down the road. Always be careful. Always be careful, and always have a plan. It's always good to be sort of have an idea. What am I going to do in the worst case scenario? What am I going to do in the best case scenario? What am I going to do when Candace goes off on a tangent again? All of those things are very valid things to have plans for. Chad, for some reason, Wealthsimple doesn't have a divvy listed for CPCC. That's weird. It might be, and this is speculation, Chad, but maybe it's because it hasn't come out yet, the first dividend. So it's been declared, so maybe they just haven't got it updated yet. Because it is brand new, but they do have a dividend. Oh yeah, for sure. Cowboy, my non-registered is getting adjusted on the second. Clean up time and move 7K into the TFSA. There's part of a plan right there as well. moving your money, taking advantage of that new contribution space. So that's not a bad thing either. That was a lot of fun. Yeah, it really was. Talking about the prediction video, that was so much fun. I really enjoyed that one. That was fun. All right. Financial Express. So yeah, guys, if you do want a Friday show, we're going to open it up today just because tomorrow is a holiday. I don't expect, maybe a bunch of you will be here tomorrow. I don't know, but this way here, I figured today's should be a higher volume of viewership than tomorrow. So we're opening up Friday. So if you want a show on Friday, that's the first show in January. Either 4 supers, 4 gifted, combination of either. Obviously, if you get to number 5, you get to see the baby New Year goat. So the baby New Year goat, and plus we have a secret goat. We have a secret goat that you guys, I'm not telling you how to find it. I'm just going to assume somebody's eventually just going to stumble on it, and then bang, out will come the secret goat. All right, Scott says my non-registered and TFSA are about equal. I'm swapping my covered calls into TFSA and VFE, VCE, VIU into non-registered tax-free distributions. Okay, interesting. All right. Jan says, thanks, Candace. You're very calming. You're a very calming presence. I was stressed over the silver I'm trading yesterday. I held, should have sold and reset this afternoon, but I'll learn. I saw you do that move. Yes. Yeah, like I look at it right now. Like right now, when it comes to the swing trading and channel members, by the way, guys, channel members do get to see the swing trades I'm doing. I did nothing today for the simple reason that there's low volume and things are still in the red. So a lot of the things I put into motion yesterday, swing trade wise, I'm really not. I don't even think I'm going to get out of those tomorrow. I'm sort of thinking ahead. I'm thinking ahead of early January when people start spending all of that money they were harvesting from tax loss harvesting. So if we get that Santa Claus rally, the 3 trades I picked should actually do pretty well. I think they'll do pretty well. Let's see. Claude says, I'll aim to do 35% HDIV, 35% HYLD, 15% QQCL, and 15% USCL in my TFSA. Okay. My plan when Candace rings a bell is to put it on mute because the cats don't like that loud noise. Fair enough. Fair enough. Oh boy. Yeah, the cats just go, wow. Uh-oh. I just noticed something, guys. Let's take a look. We had a late market sell-off. We had a late market sell-off over here on the TSX, and we did plunge. We plunged into the red. Oh boy. There we go. Can I get red? Can I get red? I think I'm, there we go. I think that's close enough to red. We'll turn up the heat. There we go. We moved into a red day. We just, at the end, look at this last candle here. I can make this a little bigger. Let me just make that a little bigger here. Boom. Let's crunch things up a little bit. All right. Actually, we'll spread it apart a little bit. Yeah, here we go. You guys can, holy banana bread. What just happened? Oh, there we go. Oh, okay. Today's like a technical difficulty day. I love it. I love it. You get them every so often. All right. All right, guys. What is happening to my market? All right. Uh-oh. All right. So the market just flattened out, guys. But we did slip down. What the heck is going on with that? I don't know. I'm just gonna refresh this page. Yes, let's leave the page. Let's refresh it. Bring it on back. All right. Then we'll head back up to the TSX, see if we can fix that. There we go. There we go. It was just acting a little crazy. But yeah, look at this. We had a nice big red candle at the end of the day, pushed us into the red for the day. So 0.10. Let's see. Actually, in the interesting thing, yeah, no, the commodities all stayed up in the green. So I'm not sure what caused that to happen. I might have to look into that a little bit later. But yeah, interesting. Okay. All right, now let's head back on over. Max is in the house with a hello. Jan says my power went out at 9:45 to 11:45 yesterday, but I still did not do too bad. Okay, yeah, you gotta, yeah, Mark, sorry, Mark is next. Yeah, power outage. I was prepared yesterday, so I charged up this baby here. That's a big power bank. It can hold quite a bit. And what's nice about this power bank is, and I don't know if you can see it, but it's those are solar panels on it as well. So in the summer, you can actually put it outside. Now it charges really, really slow, but in an extended power outage, charging slow is better than no charge at all. So anyway, yeah, I was prepared. I was prepared for a power outage, but it never came. We got the freezing rain, but everything stayed up. Everything was good. I like it. All right. Mark says, I sold all my MSTE today for 18,000 capital lost harvest in the non-registered. Original cost 25K. Leaving 7K, so we'll rebuy in my TFSA in 31 days. Okay. Well, hopefully, um, I hate to say this, Mark, but if you're planning to rebuy it back in your TFSA, hopefully it drops a little further for you, so you can, so you can get it back at a cheaper price. But yeah, it's MSTE. That has to be the biggest disappointment of 2025 for sure. I don't think anybody will disagree with that. There's probably a few people, but even then, probably not. Let's see. Brian says, good afternoon, everyone. Just got home from work. Well, welcome home from work. I heard there is all kinds of BS news going on with silver. Yes, China is saying they will require export permits before they sell silver. They want to keep it. Yeah, silver. I mean, silver's really important, and a lot of the greener technology. So solar panels, for example, use a good amount of silver. And I can understand a lot of countries want to keep control of their silver. Now, if China, let's say China stops exporting silver, that could be good for Canadian silver. We'll have to see. We'll have to see how this is all going to look. Vic is in the house with a hi. Max is not much of a Santa rally. Well, technically the Santa rally doesn't begin till tomorrow. So, we don't know yet. We don't know yet. But, it's kind of interesting. The markets could be, and this is the interesting thing, like all of that big sell-off in the last few minutes, that might have been the people who are absolutely last-minute sellers. So we got to see. Bismarcky says, what did Trump do? I haven't heard it. You know what? Trump has been pretty quiet recently. I haven't heard much of him. Now, unless he did something this afternoon when I was getting ready for the stream, today is, every so often I have a day where I did not look at the news before I started the stream, and I normally always look at the news because I want to see what's going on. But yeah, so if he did something, I am unaware. But, well, heck, you know what? All we got to do, guys, is we'll just open up a page here and we'll see if there's anything in here. We'll just head over to, let's see here, news. Let's head over to, we'll just go to BNN, because if there's anything big in here, yeah, I'm not seeing anything in here like show impact-wise. It would be at the top. It would be at the top if we had an impacting story. And just more or less more stuff about outlooks for 2026. So all of that fun stuff. And if we try something as well, like, if we go, now this here, CIA drone strike Venezuela, first land attack. All right. So who knows? This here, I will say this Drudge Report tends to lean pretty right. So I like to balance my news. I like to balance it. So if I'm going to look at something like this, a right-leaning news source, I will almost always wash it down with something something a little bit on the other end of the spectrum. So maybe CNN, for example, and that way there I can sort of see. So yeah, CIA carried out drone strike. There we go. So yeah, so obviously that was a big thing. But yeah, so nothing really going on. So what can I say? All right, let's go big screen here. Scott says, I'm still green today thanks to eBank, metal stocks, and CNQ. You gotta love eBank. eBank has been, and guys, let's take a look. Let's, oops, I should share it again. All right, let's take a good look over here at good old eBank. All right, I should get a new mouse one of these days. I feel like my mouse is so old that it would probably work better if it was new. Yeah, eBank, look at that. They're up 0.47 today. So eBank, this is one of the Evolve ETFs. This one here is European banks. Go away there. All right, there we go. So here we go. The Evolve European Banks Enhanced Yield ETF. All right, and just look at them in the last year. This has been like this. eBank has actually outperformed bank. So just something to keep in mind. So they have gone, like, take a look here. They opened a year ago at $11.06. They're now $16.03. And in addition to that, you're getting a monthly dividend of, well, 10.9%. That's the current yield. Now, mind you, that yield used to be much higher when the price was much lower. So yeah, that yield has dropped quite a bit, but that's a normal thing, guys. It's really interesting. A lot of people will look at a yield and sort of judge on the yield. I don't judge on yields per se. I like to look at what that dividend is because, especially if you are that hybrid format of investor, the yield going down is not always a bad thing. It usually means that you're getting your growth. You're getting your growth component. Now, with a pure dividend, pure income investor, and you're not really looking for growth, in that case there, the yield becomes a little more important because a lot of the stocks that you're grabbing are stocks that are not going to pick up a lot of the growth because they're going to be at the money covered calls, meaning that they're going to write the covered calls at the price so they can get higher premiums for that. And that changes things quite a bit. So it's interesting. But anyway, eBank has been absolutely on fire over the last year. And I'm pretty bullish on the financial system in 2026. So I think eBank is going to continue to perform pretty well. I think bank will continue to perform pretty well. I think 60 will have a pretty good first year. Also, any of the other ones. So we got that new one as well from Harvest. That new their version of 60, I guess. That'll probably do okay as well. Let's see. Brian says you must at least received some decent dividends along the way. Oh, you must have. There we go. Brian's talking to Mark. You must have received some nice. Hippo, my TFSA was pretty sideways all day till the end. Now it is definitely red. Yes, absolutely. Mark says, yeah, about $5,000 in dividends that Mark got from there. So at least that helps. That helps a little bit, but it still doesn't get you. It still doesn't help as much as you'd like it to, for sure. Brian, ouch! I was hoping you made closer to 10K in dividends. I think tomorrow is ex-dividend date for MSTE. And let's see, Canada is actually a small player in silver compared to many other countries. Yeah, I mean, although there's a lot of other countries that will absolutely have a lot more silver deposits for sure. Canada's got a good presence though. Like, a lot of our silver companies are not mining in Canada, of course. They are mining in other countries, but I do like it. Let's see. A video said last day of the year could be high because financials are trying to make things look good year end for their bonus. They said never underestimate a banker and their year-end bonus. Yeah, bankers. Oh, boy. Let's see. Brian says Trump is in talks with Putin as to how they will divide up Ukraine more than likely. Yeah, well, I know that there was at one point, Trump said that they were about 95% towards a peace agreement between Ukraine and Russia. I actually really hoped they would get it because if you guys remember, that was one of the misses I had on my prediction video from last year. I predicted there would be an end to that war in this year, but there's still one day left. It's probably not going to happen. Now there's a new controversy as well. Russia is claiming that Ukraine tried to take a shot or something at Putin's hit one of Putin's convoys. So it's kind of like, yeah, it looks like it looks like we're just going around in circles again. To be honest, we'll have to see. I'll believe peace, I think, when I see it. I don't think I'm going to predict peace in 2026 right now at this point. Wahibble says eBank is one of my favorites. Mark says I'm very green today in my watch list. Oh, nice. Well, you're watching some pretty good ones. All right. Tom says, I noticed on your swing trades, you usually have around 3 holdings. Is that just to have a better flow than compared to just 1 or 2? Yeah, I tend to. It's kind of like diversification, right? I don't like to go all in on one trade, so I will normally have 2, 3, 4. And that's just the way I sort of spread it out. I like to spread it out a little bit. And it is nice too, because then, if you get caught in a longer trade, you've got your other trades that, you can sort of move, end them, take your profits, open up another trade, all of that fun stuff. All right. Michael is in the house. Hey, sorry. Hello, Candace. Do you still have a position in Roger Sugar, which I know you liked a year ago? I have had my position for years and find a steady eddy, especially if there is future volatility. So right now, I currently don't. Currently, right now, I'm not holding Roger Sugar. I do like Roger Sugar, though. Let's actually take a look. I haven't looked at Roger Sugar in a few months. Here we go. Roger Sugar, RSI. There we go. And I will pull up. So yeah, here we go. Here's Roger Sugar. So Roger Sugar is kind of they're one of the bigger companies now. I know I did a story on This Week about them. Oh gosh, it must have been 6 months ago or so about about some of the expansions. But recently, yeah, that's an interesting bump there. I'm going to assume that might have been an earnings bump. That feels like an earnings bump, but yeah, they've done pretty good. So 5.93 now on the year. Well, on the year they're actually down a tiny bit because let's see, let's put it in here. Yeah, they opened at 594. So now they're at 593. So they've gone down a penny over the year. But I still like Roger Sugar. It's just not one of those companies that it doesn't excite me as much as I would like it to excite me. And just to sort of pull things up a bit, they do have a half decent yield, so they're paying out about 6%. It's a quarterly dividend. And let's just take a look at their back end. I want to see if anything has changed on Rogers Sugar. There we go, key data. All right, so yeah, their debt currently at about 85%, but there was some expansion, as I mentioned. So yeah, that's going to be a little bit higher. Return on equity, 14.63, not bad. Of course, you guys know I love that 20, so it'd be nice to see that come up a little bit. But yeah, no, there's nothing wrong with Roger Sugar. They're a pretty good company. All right, Jan says I don't sell any banks anymore. Okay, fair enough. And Cowboy, all is fair in love and war, they say. Putin should be aware. The mess. It's a mess it's always a mess over there, but what can you say? Yeah, I don't know. Sergey says, hello, Candace. What do you guys think about HHIS? I got mine when it was around $14, and now I am in red a lot. Do you think it will recover in 2026? All right. So HHIS, let's pull HHIS up. Now, I do like HHIS. So this one here is the harvest one that has all of the little single income shares in there. So they're all in here. That gives them a little bit of diversification. Let's pull up. Yeah, we'll pull up. I want to pull up their whole history here. There we go. So yeah, you can sort of see right now you're at a stage where unless you bought it down in here, you're probably sitting a little bit in the red, at least on the value surface. Now, when you look, if you add in all of the dividends that you've received, you're probably, hopefully you're still in the green. But yeah, there's been a little bit of issues with a few of the stocks that they're holding have not been doing so well. So as you guys know, I did that cheese. I call it the cheese video, the stink one. So there was quite a few of their ETFs in there. There's quite a few harvest ones. So of course MSTE taking the cake. There was the Costco one. So there are some that are not doing so well, and that is certainly helping to pull this down. And right now as well, technology, the technology's kind of, I would say technology hasn't had the greatest end of year. So that's definitely pulling things down. So will they recover in 2026? I think it's going to be a rough ride in 2026 overall. Like I think technology is going to see some really interesting stuff, and I'm trying not to sort of spoil my prediction video. But I think technology is going to have, some companies are going to do really well. Some companies are going to correct a little bit. And how is that going to work out for HHIS? Well, they are well diversified, and I think what would be smart for Harvest to do is make a few more of those single stock ones. I'm not a big fan of single stock covered calls, but if they made a few more outside of the tech sector, I know they've already got like Eli Lilly in there, but branch into a few other sectors. I would love to see them maybe bring a little bit of the financial sector in as well. Just things to sort of help increase that overall diversification in there. So I think that would be a good thing for them to do. I haven't heard if they're going to do anything like that, but I would love to see that happen. I still think HHIS is a good ETF. It's a good income ETF. So if you're looking at it for growth, you're not going to get a lot of growth. It's designed for income. It's designed to play off the volatility of technology and the other companies that they have added. So will it be in the red? It might. It might be in the red. It might be a little in the green. Like I said, you're not going to get a lot of growth, but you will get a lot of income from it. And when you look at it from a total term perspective, hopefully it makes sense at that point, because that's what you're looking at for HHIS. It is an income stock. And it's in the title. It's in the title as well, income shares. So it is about income. I wouldn't call it, I would not call it I wouldn't call it a hybrid stock or a hybrid ETF, sorry. So I would call it a pure income. But I do like it. I still like it. I think it's a solid concept, and I have it in the 0 to 100K, and I have no intention of getting rid of it. Now I don't even know, actually I don't know, but let me take a look. I'm going to take a quick gander here. All right, let's see where it is in the 0 to 100K challenge. All right, so sitting here in the challenge, oops, it is sitting at, yeah, now I got in, so my adjusted cost base is 1166. And so right now that puts me at a return on investment of $8.23%. And once you factor in the dividends, the total return right now on that one is 25.64%. So, I did get in at a really good spot, but I still like it. It is income. And you can see the big difference going from 8 to 25. That sort of shows you what it does. So it's an income. It's an income ETF. All right. Let's see. Michael says, I forgot to mention I like Rogers for income and feel I am holding a bond. Okay. So you're looking at it. So you're just sort of holding that one for the income. All right. Fair enough. Yeah, no, Rogers, I mean, they're a good company. I don't see any issues with them. And hopefully the expansion, hopefully once that comes online and their production goes up, that could be good for Rogers. So it's not a bad company. Jan says I sold some JPEG today and bought some dips and copper. Let's see, the steadiest ETFs yesterday in my portfolio were CLSA and ECHI, close second. Yeah, so CLSA, that of course is that Brompton split core ETFs, the split core ETF. So yeah, I do like it. I like it quite a bit. And I know that some people are a little bit leery of split cores. Now the other one here, the ECHI, that's a 9.1. Let's actually pull it up. I don't think we've actually really looked at it. I mean, it's so new. It is still very new. All right, so ECHI. So here we are. This is 9 points version of Canny. So your enhanced Canadian high shares ETF. So the first thing I'll say before I even look at anything here, with the Canadian market doing what it's done this year, I have high expectations. So let's pull it up and take a look. Let's pull up the 6-month here. And yeah, it's done exactly. This is what my expectations are. So this one's gone from $10 to $11.58. So once again, when it comes to the covered calls, when I see growth of this nature, it's obvious that they're probably doing out of the money covered calls on it. So basically, they're writing their strike price is a little higher so that they can get a bit more of that upside potential. So I like that. So and I like what this fund has done for sure. Yeah, good old ECHI. And here's the interesting thing. Let's actually, just for giggles, I'm going to duplicate the tab. Let's compare it to Canny. All right. And this is the Evolve one. And I do like this one. However, I will say one thing. And this is why I'm going to compare it, guys. There's a reason. A reason for my madness. I'll pull up the 6 months. All right. Now, we got a big slope up. We got a good amount of growth. We don't. We got a more sideways. So what is the difference? Well, there's a big difference. So first of all, let's go down and look at the dividend. So right here, this one has a distribution yield of 15.57%. And this one, that's wrong. It's not 5.77. So sometimes with a new one, it can get it really, really wrong. But yeah, this one here is more aggressive. Let's just say, actually, it's a better point. Look at this one. Look at the size of the yield, 21 cents. And you're getting that twice a month. So basically, it's almost like a 42-cent dividend. When we look at the other one, you're getting 15 cents just every month. So anyway, the big difference, and this is what I'm not worried about the price. I'm not worried about the yield at this point. But these guys are out of the money. So they're creating space for growth. So that way they're capturing some of that upside, and as a result, you get smaller dividends. Whereas when you look at something like Canny is writing, they're pretty close to at the money. So you're not getting that upside, you're getting the growth. You're getting the income. This is designed entirely for income. You're getting it twice a month. That's what it's designed for. It's doing its job. And this one is designed to give you both. So income and growth, just smaller income, bigger growth. So it's that compromise. So obviously in this case, if you are if you're a growth income investor, ECHI would make more sense for you than Canny. Whereas for a pure income investor, Canny makes more sense than ECHI. So anyway, just thought I would go on that little tangent there. Scott says, GDV and RS put me off splits. I added them thinking diversification, but they didn't do well. Yeah, understandable. Yeah, I mean, and you got to keep in mind too, what we saw in the last bear market, there was a double stimulus going on. You had a bear market, so everything was down, and then you had interest rates go. That flowed right into a huge interest rate, aggressive hike. That was also another big stress. Although I think most of these guys, I think most of them suspended their dividend back during the first part before the aggressive rate hiking started. So I think the bear market itself was just pretty rough on some of them for sure. Because yeah, they do work. So guys with split cores, you have two different types. So, well, not two different types, but you have two different stocks. So you have a preferred share and you've got a Class A share. So the Class A, that's the one that has the big dividends on it. So that's the ones that we're looking at. So like RS would be a Class A, GDV would be a Class A. But between the two of them, if you take their two prices, they need to be above $15. If they fall below $15, and $15 is what's known as a NAV threshold, if it falls below that, then they will suspend their dividends until they get it back up. That's the way that these work. So a lot of times, if you are investing in split cores, and this is the way I would do it personally, is I'll watch them. I'll look at both because I want to know how far they are. If they're way above that threshold, then I'm happy. But yeah, if I had a split core that was pretty close to the threshold, I probably wouldn't jump on it. And obviously, if you want to avoid all of that together, that Brompton split core ETF, CLSA, that's a way to avoid that as well. So anyway. The tangents. Zenio says Echo has been much stronger than Canny and HHIC. It has Barrick and additional Shopify and Cameo exposure. Yeah, absolutely. So yeah, ECHI. And also keep in mind, once again, they're letting you get some of that growth. So that's another reason I think to like it. If that's your goal. If you are pure income, then it's probably not the choice. Let's see here. Michael says, I am glad I held Amerigo Copper play. You had applauded me at this time last year for purchasing. Yeah, copper's been a great. It's been a great, like a lot of stuff. Like even look, one of my favorites is Marimaka. So if we take a look here, and this is in the video. This is actually in the video. Now, I don't really break it down because we're going through a lot of stuff. The video is mostly about copper, today's video. But when you look at this over the last year, I mean, they've you can see the copper explosion. I mean, most of it happened right in there. But they've gone from like, let's see here, what is this? $5.25 to $11.13. So that's more than 100%. And we're seeing a lot of this, and I think copper is going to be really, really big. Once again, if you haven't seen today's video, check it out. And I'll give you, I'll break it all down for you. I'll break it all down for you in that video. Brian says, I keep picking up small amounts of HHIS with my dividends, $12.64 average cost of my TFSA and $13.27 in my RRSP. I always use my dividends to add shares of dividend ETFs to my choice. No drips. Fair enough. Paul says, just finished chatting with Quest Trade. Today my RRSP was gone by my former RRSP holdings. Were still showing under all accounts, but RRIF had no holdings. They said I should see the holdings on the 31st. Okay, yeah. Down to the wire. Yeah, you can't get closer to January than the 31st. That's for sure. Let's see. I don't have to face the RRIF conversion for another 5 years. Yes, that's a cool thing. But one of the things too, guys, and this is something, now that we're sort of mentioning it, there's kind of this one little period of time. So when you retire, and when you start receiving your supports, a lot of times they're not always lined up. So sometimes you'll actually have a few years upon when you retire where you're not making a lot of money. those are really good years to be pulling from that from your RRSP. I did a video on the RRSP meltdown. It's sort of all it all. That's a good video for that. But one of the other reasons is that if you think about it, the more you can utilize your RRSP in lower income years before you actually even get to the point where it becomes an RRIF, by pulling out some of that money, moving it to your TFSA, if it's even if it's just topping up your TFSA, your yearly contribution, it does lower the amount because it all the mandatory withdrawal on the RRIF, it's based on a percentage. So, if you have like a really big RRSP, and there's people who come into retirement with, like $1 million sitting in their RRSP, every little bit you can get down there can knock that down, because you don't want to get to a point that, if at 71 you've not touched your RRSP and you've got over $1 million or even more, it could be a situation where those percentages could actually threaten things. For example, OAS. You could have an OAS clawback simply because you didn't deal with any of that money and you just let it get really, really big. And when it's mandatory coming out, I mean, you're going to be fine though. I mean, obviously, but the fact is the tax man gets more money than they should get in that situation. All right. Patricia is in the house with a hi. Let's see, Paul, I did it early. I'm not waiting till age 71. Did the RRSP to RRIF conversion at age 58. That is 3.13% minimum withdrawal without taxes withheld, pay later. Okay, fair enough. Also, you don't need to convert the entire RRSP to an RRIF. All right. Let's see, can you convert in one bank and still contribute to your RRSP in another bank? That's a good question. Well, yeah, my understanding, and I may have to look into this a little bit deeper, but I can't see why that would be a huge issue. I mean, even though if you convert it to an RRIF, yeah, let me look more into that, Brian, because I don't want to, right now I'm kind of speculating a little bit in my mind, and I don't like to speculate. Paul says, I think so. I think so too, but I want to verify that. Is there a market close on Friday? We don't know yet. We don't know yet. The market is open on Friday. We may have a market close. We do have, if we get 4 supers or 4 gifted, we'll have a market close on Friday. That has not happened yet, but, we still... Yeah, we are coming towards the end of the show. We probably got another 15 minutes or so if you guys want to do that. Cowboy says, with our limited electrical grid, I don't know how they expect to go electric vehicles when we have brownouts. Yeah, we definitely have some brownouts. Let's see, when we have brownouts during hot and cold temperatures stressing the grid. I think they kind of got that idea, and I know that the government has sort of pushed back some of that mandate. Yeah, the grid's not ready. The grid's not ready at all. And I don't think we're ever going to hit any of those ambitious goals that the Liberal administration had put in. No, they're not going to be hit. They're not going to be hit at all. And keep in mind, we also have AI and data centers. That's more stress on the grid. So yeah, absolutely not happening. Scott says Parallel Wealth has some great videos on maximizing RRSP meltdown and tax optimization. Yeah, absolutely. So, and that's the thing, guys. I touch on some of that material, but Parallel Wealth, that's what they do. That's what they do. All right. Brian says, when I work on my own over the next few years, I'll see what I can out of my RRSP and into my TFSA without a tax hit. It's not that big anyway. Yeah, and I look at it this way too, though, guys. Like, do the math. Like, project forward. So when you say, okay, well, I don't want to take a tax hit. If you don't take the money out and if you don't take a tax hit, how much of a tax hit will you take later? That's always a good thing, to have a general idea of the math and then sort of work it out and figure out which one gives you the best overall lowest tax hit when you look at it cumulative. That's the way I like to look at it. Now, there might be some people are of that sort, like, well, I'd rather just pay lower taxes now. We'll deal with it later. We'll sweep it under the rug. Yeah, what can I say? All right. Oops, and I got a couple things going on here. Let's pull this up. We got Sky in with a $2.99 super sticker, and it's begun. It has begun. We have our first goat. The corral is open. And well, it's not all. As awesome as Sky is, Bismarcky has dropped in with a gifted membership. Who won? Let me just see here. Wayne Smith. Wayne Smith, congratulations. Wayne Smith won. So we have, well, there's our second goat. Our second goat. We're getting there. We're getting there. And that's not all, guys. Paul came in as well with a super sticker of $1. And that's enough for a third goat. So we got 3 of the 4. We're 1 away. Obviously, if you want to see the baby New Year goat, we're 2 away. There's also a secret goat as well, guys. Well, I'm not telling you how you get to the secret goat. If you guys figure it out, then you can see the secret goat. But the secret goat may be a secret for a very long time, or maybe not. I don't know. Oh, and one more. We got one more in here. Brian. Brian's come in with number 4. So number 4, our 4th goat in here. Bang, boom. And that is a, who won? Who won? Let me see here. MU1VX7Z1 or ZI1U won a membership. Congratulations. Congratulations. And thank you very much, Brian. And, oh, Brian. We also have a $1 super sticker from Brian because we all know Brian wants to see the baby New Year goat. Here we go, Brian. The baby New Year goat. Oh, boy. Oh, my gosh. Yeah. Oh, that one's neat. So, yeah, we have... we're getting there. We're getting there. So we still have a secret goat, but like I said, you guys will figure out how to get to the secret goat someday. Someday. I don't think you're going to do it today. All right, now, this is where I have to go all the way back and figure out where the banana bread we were. Right here, I think. Brian says, when I work on my own over the next few years, I'll see what I can out of my okay, no, wait a minute. We did that one. All right. Let's see. Here we go. Paul says, only problem with pulling out from the RRSP is brokers charge $50 each withdrawal. RRIF, no broker withdrawal fees. Yeah. Now, mind you, when you are pulling out of your RRSP, the amount that they're charging you, it's withholding tax, so you do get it back at tax time. Just keep that in mind. Let's see. Yes, I read that as well. And Brian says, I only have my RRSP in Wealthsimple. I was just curious. That's all. And let's see. Paul says, I'm still doing an employer match at 3% to an RRSP in my part-time work. The amount is so small, will not make much of a difference. Okay, fair enough. Subsidized super chat from Google Opinion Rewards. Gotta love the Google Opinion Rewards. I keep meaning to look into that just to do it because I like to give my opinion. But let's see. Brian says, I have some Apparel Wealth's videos saved in my watch later, even though I have watched them because they are good for the future. Oh, fair enough. Fair enough. All right. Oh, I can turn off the Financial Express because we now have a show on Friday. So the Financial Express continues into January. We'll see, we'll see how long it lasts. It's always fun. It's always fun. All right, let's see here. Cowboy, we need to increase base power in reliable forms. Wind and solar are not reliable. It's a nice idea, but not practical. Well, you know me, I like my nuclear power, so I want to see more nuclear power for sure. Scott, my past 2 years have been spent researching funding my forced retirement. All right, fair enough, fair enough. Now, why is it forced? Is it just your job? Your job just sort of says, you got to retire at this age. Some jobs do that. Air traffic controllers, I think they have mandatory retirement ages where they're like, nope, after this age, you're a danger to the planes. So yeah. Lisa says, I will never miss a video by Parallel Wealth. Yeah, I don't know if he'd come on my show or not. I should reach out to him. He'd be a fun one to bring on. Brian says, I assume we have a show tomorrow and not Thursday. We do have a show tomorrow. We have a show tomorrow, and you guys just earned a Friday show. So we will be here tomorrow. There's no show on Thursday. Yeah, everything's closed. Both markets are closed Thursday. Then we'll be back on Friday to kick off the month. All right. Paul says received $485 so far from Google Opinion Rewards. That's not too bad. That's not too bad at all. That's a good amount for sure. Oh boy. All right, guys, we are getting towards the end. If you got your last minute questions, comments, all of that fun stuff, I'll throw them in the chat. Throw them in the chat. I'm gonna have some coffee while I wait. Oh, let's go big screen. Let's see. Forced as in they said we're cutting our workforce and you just made the cut. Oh, yeah, you hate those. Yeah, layoffs. Well, it depends. I've had some good layoffs, but actually one of the I've been involved in a mass layoff before, and those are good. They're like, it's so easy to get EI coming off. At least it used to be coming off of a mass layoff, and yeah. So I've had a few. Probably though my best is the technology company that I was working. It was a company called Uniserve in Vancouver. So they were a victim of the housing crisis because they had just bought a company back in 2008, and well, we all know what happened. It hurt them pretty bad. So I was making a lot of money. So I was pretty much, I could tell. Once the housing stuff started happening, I was just like, this is not going to be good for us. And then I'm like, I'm probably getting laid off. But what was good about it is because when you're in upper management, you get severance. So I ended up getting 3-month severance, and then I went on EI. So basically severance, 3-month severance means they pay you for 3 months, and you don't have to even show up to work. So it was great. And then I had full EI after that. It was kind of it was a very nice break. So between the severance and the EI, I mean, there was money coming in for, a good year or a little longer than that. So not bad. It was not bad. But that was probably the best forced retirement. Cowboy says, dropped my RRSP, used it to pay down mortgage. Let's see. So I was mortgage free. I was able to invest, save. Okay, perfect. Paul says, my part-time payday would have been January 1st, but the pay stub shows paying December 31st. Assume that is now 2025 income versus getting paid on January 1st. I think so. Yeah, if it, as long as your T4 reflects that as well, then yeah, it's going to be 2025 income. Scott said I had 18 months and I was already eligible for pension. Okay. Yeah. And that's the thing. I guess one of the best things is, we will probably see, like, as AI gets more and more prominent and jobs do start disappearing, if you're in that, that zone where you're not that far from retirement, you might even get in a situation where they just offer you early retirement. So that would probably be one of the better ways to go. Brian says, I was laid off from Skyjack for a plant closure, one of 3 plants in 2000. I took the EI, Self-Employment Assistance Program, and started my own business. Nice. That's the thing. I always look at it like this too, like, even if you get laid off, there's a whole bunch of programs as well through EI. Like if you get laid off in a sector that, let's say, AI is taking over, um, I would look into stuff like that because there might be some training that you could get for something else that they'll pay for and everything. So it's not a bad, and plus they might even extend your AI if to accommodate training. But you want to do it soon. You don't want to do it like when you're in the last couple of weeks of AI and it's running out. You don't want to be trying to get onto a program like that because they'll be on to you. They'll be like, yeah, if you were serious about it, you would have done this earlier. All right. Now, Brian says 6 months school program and an extra year of EI with no clawbacks as long as you made less than 30K. Oh yeah, that's pretty much exactly what I was just talking about. Let's see. Paul says, I broke the 5th metatarsal in my left foot December 8th, 2024, collected EI sick pay until June of 2025, and then converted to EI claim into regular benefits and continued reporting hours to EI until November. Yeah. And I remember I remember your poor foot. I'm so glad that it's better now. And let's see, while working with limited hours. All right. Have Blossom portfolio stopped updating today? I don't know. I haven't really looked at Blossom at all today. So, let me take a look. I'm just going to head over here. This is Blossom. Let's see here. Bring up the portfolio. So when you're saying updating, like what? Updating with your broker? Is that what you're thinking of, Jonathan? Because I'm like I edit mine manually. Mine's all manually added. So I honestly I don't know, and I have to actually add everything in here. And ooh, what is that? What is that? Messages. Oh, finally. I'm happy about this, guys. So these are the direct messages. So I have to always go to my phone to see direct messages when people direct message me over on Blossom. Now it looks like they're adding it in. So I'll be able to get my direct messages on the desktop as well without having to go to my phone for them. I do like this. And guys, if you want to direct message me on Blossom, go ahead. I may not get to them right away, but feel free. I mean, you can like also with Discord or Facebook, just message me. I'm pretty open. Brian says with assistance programs, they took people with only 1 month remaining on their claim. Okay, interesting. Scott, it was 2 years earlier than I expected, but Trump tanked the market and I cashed in on it, pushed me past my milestone for being comfortable. And then Cowboy says, missed a layoff with job security by a couple of months. The guys who made it were paid until 55 retirement. They worked other places getting 2 paychecks. Nice. That's never a bad thing. Never a bad thing. All right, guys. There we go. We've hit the hour and a half mark. Well, wait a minute. Before I go into that, I asked Jonathan this, so I gotta answer. The stocks in the portfolio are showing 0% change on the day for all stocks. Oh, yeah. Look, today's return plus zero. Oh, something must be broken in the back end. That's interesting because yeah, I'm getting the same thing here. Interesting. All right. That is interesting. Yeah. I don't know what's going on. But let's see. We'll see if they get this fixed by tomorrow. If it's not fixed by tomorrow, I'll reach out to Brandon and say, get on it. Yeah, so it is not just you. Nope, we're seeing it right. Oh, actually, guys, I forgot. Yeah, look, right here, guys. Right here, 0. It is right here on mine as well. So yeah, we're all seeing it. Scott said they had a clause to terminate my severance if I got another job. Oh, yikes. When I got severance, I didn't have any clause at all. There was like no rules. I was like, all right, cool. But normally it's like a non-compete in there. Like, a lot of companies will, you will not be allowed to work in the same area during the severance. Some companies, depending on what you're doing, some companies you've actually signed stuff where you can't work in that area for a year. I mean, it's crazy, some of the rules. But yeah, always know what you're signing. That's what I say. And nowadays, no, you have no excuse, because if you get a contract, just upload it to your chat GPT or your AI and have it summarize it and pull out any little fine print in it for you. Yeah, always a good idea to know what you're signing, for sure. All right. Whew. All right, guys, this is the end of the show. Thank you, of course, for coming, and we will be back here again tomorrow and Friday. So it's going to be another busy week. Yeah, and then tomorrow night, oh boy, New Year's Eve. So hopefully you guys all got plans. I can't wait. I'm actually looking forward to Friday. It's like, let's get into January. Let's get this train on the road. So I can't wait. Anyway, guys, until next time, I pretty much have one word for you guys, and that is